Hello, everyone. This is Tim Allen with Massey Allen Group at Compass. It's November 6th, 2025. This is your quarter four real estate market update. Let's break down what happened this year and what it means for you. At the start of 2025, just like the last 3 years since 2022, when the Federal Reserve raised rates the fastest ever in history, we had a lot of activity, or more robust activity, in quarter one and quarter two. And what I mean is more transactions in those 2 quarters, more sellers participating, more buyers participating than in Q3 and Q4. But, that's normal, kind of regardless of economic changes. You know, every time the holidays is over and we start January 1st, it's a fresh new year. It's a new year, new me, new vibe kind of a thing. And sometimes buying a house plays into that. But as the new year went on, we have a new administration in place, as everyone knows, new trade policies, new economics that we kind of shifted in certain directions, and that caused uncertainty. So as we had a certain rate of listings hitting the market in Contra Costa County, because of the uncertainty with the new trade policies and the new economic policies, buyer demand really took a pull back. As that occurred, the reaction was listings were still hitting the market, but they weren't getting absorbed. So what we had inventory building for a short period of time. That led to price cuts, but sellers, a predominant number of sellers out there, over 70%, still have mortgages with 4% interest rates or less. So after a couple of price reductions, you started to see the withdrawals or the reduction in supply as sellers took their properties off the market because they're like, all right, I guess we'll wait till next year and try again, or into the future. Okay. So we had supply and demand at the beginning of the year. Demand pulled back, inventory grew, but then inventory started to pull back, and now we just have less sellers and buyers participating in the market. That's kind of been standard or stable for the past 3 years. That relationship of supply to demand has really kept values high, and unfortunately participating in an environment where mortgage rates are higher really affects affordability. So, if there's stronger demand in the market without the addition of supply, that causes prices to kind of inch up. In a environment where values are higher and rates are higher, buyers kind of get exhausted of those 2 metrics, or maybe they can no longer afford a house and they give up. And that's where we see the activity kind of taper off in Q3 and Q4. So despite all of that, our numbers have been pretty stable within, small volatility windows. Again, Q1 and Q2 being more robust than Q3 and Q4 each year for the past 3 years. And it's really that inventory versus demand equation keeps us balanced. But looking forward into next year, there's some positives. The one big positive is potentially the AI boom. Additionally, many companies in San Francisco and across the Bay Area have return to office policies. Well, if they have return to office policies and now you need to be in the office 5 days a week and you can afford to do so, those who migrated away during the COVID era may be migrating back towards or closer to their center of work to cut down on that commute time. I know that doesn't work for everybody, but that'll cause movement, that'll cause real estate transactions potentially. Okay. In addition, the new mayor of San Francisco has got some policies that are potentially going to help ignite the local economy in San Francisco. On the flip side, we're still dealing with uncertainty, mainly with rising unemployment. Currently, we're in the longest government shutdown ever, and then the trade policies are under scrutiny from the judicial branch. So we got to see how that all works out. So we're probably in the past 3 years at the greatest point of pressure on downward on prices. So from there, it's kind of up to you to decide. Do you feel like we're going to have more uncertainty going forward, or are we going to have optimism and we're going to be able to outgrow some of these concerns in the economy? If you feel more positive about it, we could see, again, another robust quarter one and quarter two. If you're worried about uncertainty and you don't feel like you're going to participate, maybe having a job is a concern of yours, then you might expect a more sluggish real estate market going into next year. Okay. If you are willing to participate and you feel there's opportunity there, I think right now the opportunity is for those buyers because we have downward pressure on prices. There's not a lot of people participating in the market. Or if you're a trade up seller, you're gonna let go of an asset that's at this value and you're gonna go purchase an asset up here at this value. Because if you're getting discounts on both of those, the discount's greater on the purchase. Theoretically, that puts money in your pocket. If you're a seller that's going to be downsizing, it's probably worth at least waiting to Q1 or Q2. Generally speaking, those have been more robust. If we're on trend next year, you might have more success or put more money in your pocket in Q1 or Q2 of 2026. Again, I'm Tim Allen with Massey Allen Group at Compass. If you're curious how this impacts your individual decision or want to discuss anything further, reach out to us. We'd be glad to help. Have a great week. Have a great day. Have a great year. See you next year.